So thank you everyone for joining us after your well-deserved break, and looking forward, to having this discussion with the esteemed panelists. So thank you for joining us. And what better topic to start after the break is talk about money, right? So, and I think like here, if you look at the title of our panel, right? When we think about money, we think about something that we, were brought up, something intuitively we understand. We have it in our banks, right? In our wallets, in our banks, right? Or as notes, right? Then we had this big innovation that came some 15 years ago, which was the idea of digital money, right? Which is Bitcoin, right? So I don't know how many of you read actually the Bitcoin white paper. The first sentence says that we are building a peer-to-peer electronic money system, right? So that was the original idea actually of Bitcoin. But then kind of over time as price went up, I think less and less people thought about Bitcoin as money, right? But then actually stablecoins appeared, right? Because cryptocurrencies, they were very volatile. They moved up a lot and down, and people wanted something stable. And then these stablecoins came about, and today the most popular stablecoins are dollar stablecoins. But here we're in Europe, we have euro stablecoins. I come from Dubai, we have dirham stablecoins, so we have other ones. So this is going to be the topic of discussion for today. Maybe to start it off, to actually, first I will give you the opportunity to introduce yourself, but maybe each of you could tell me from your perspective, just as a very short answer, what do you think is the biggest change today actually when it comes to money? So if you can introduce yourself and then also say what you think is the biggest change.
I think today everybody wants money to be available when they want it. Doesn't matter what is the technology behind it or how does it move. Who cares, right? When you need money, it should be available with you. That's it. Yeah. So that is the concept on which everything works. So Bitcoin, stablecoin, whatever you want to call it, really doesn't matter. Okay. Yeah.
I like your answer. I think that obviously makes a lot of sense, but I think there's rules around using money, right? So I would say we're right in the middle of a lot of regulation happening. So I think regulation is actually a big driver in how money is moving today and how it will be moving tomorrow. So I think today with last summer's Genius Act, other things coming our way, we're in the middle of MICA right now, that is absolutely affecting how money is moving, probably the most.
My name is Alex Behar. I'm the Chief Information Officer of Zota. And when it comes to money movements, I think there's a few trends that are sort of happening in the market. And one of the most exciting ones is probably the collapse of the cost of intelligence. With LLMs that are getting ever better harnesses and much better use cases, you now can have basically a hedge fund manager in your pocket. And as a result, there's an entire ecosystem that is slowly being created around it, around microtransactions, things that were not possible with legacy payment networks up until today.
Actually, I agree with
everybody.
All of my peers. Since I'm the last one, I really can't add too much to it. I do see that in regulatory perspective, and the stablecoin specifically, this is where a major shift is happening. In addition, with a lot of legacy banks doing the interoperability between basically the new technology and the old technology. You see a lot of companies, Visa, MasterCard acquiring as well, crypto-based infrastructure companies, and they see the potential there. So I would say this is the only thing I would add more to my colleagues here.
Awesome. I promised to the audience, I told them not to agree with each other, so they're going to disagree a lot, so I don't think this is going to be an exciting panel. So maybe then a question, actually, because I think you make a great point. I think from Bhaskar actually said, money is just something we want available at all points, right? It's just, we don't want to think about it, right? But at the same time, we have an understanding that sometimes fiat is more convenient than actually Bitcoin or their stable coins. So could you actually share from your experience or your thoughts, Chris, maybe for both of you, when do you think fiat is more convenient, more efficient, faster actually than stable coins? And what are the use cases, if you can educate the audience a little bit? Maybe, Kristen, if you can start, yeah.
Sure, and I think I was supposed to introduce myself, so apologies. Kristen Reichel, I work for a company called Rapid. We are basically a global fintech infrastructure. So great to be here. So now you have to remind me of your question.
No. So what do you think, when it's more convenient or better to use stablecoins, when it's fiat?
Of course. Yeah, so I mean, of course, if I have cash, I can hand it to you.
Yeah.
It's sort of hard to replace that. So I think when you're talking about fiat currency in your own country, you are established there, you are registered there, licensed, you have employees in the same country, you're buying and selling goods in one country. Fiat is great. Systems aren't perfect. Maybe they're a little slower than just handing over some cash. It's as soon as you start mixing currencies, I think that's where stablecoins really take over and improve things drastically. So if you are operating globally, you're working in different currencies, you have to move funds on a regular basis, you have to maintain Nostro accounts in different countries so you can settle faster, that's when stablecoins have tremendous power behind them.
Yeah. Alex, what are your thoughts? And maybe you can also share a bit, since we're in Europe, what is the point of your stablecoin, given what Christian just said? Yeah.
I mean, I would just avoid that topic entirely. 98% of all stablecoin volume is in USD denominated, and this is where it appears that demand lies. And for now, localized sort of fiat-pegged stables are basically nice technology projects, but they're not finding any good adoption. And it's just to sort of reaffirm your point, Kristen, on this. I think that from just a more global perspective, these kinds of technology waves tend to spread around as people just start consuming internet services and they don't really care where they are.
Yeah.
Right. So unfortunately, the first really sort of killer feature of blockchain applications are ones that are not very useful in our day-to-day lives, unless we spend our days on Polymarket, which a number of our peers are. But from that perspective, the more use cases we find, the more entrepreneurs go out there and build applications that people want to use on a daily basis that are operated on these new rails, the more fungible the tokens become. Whether they're USD pegged or others, time will tell.
Okay, and just before I go to Vaskar, actually, I wanted to ask you, how do CBDCs fit into the story and the discussion around stablecoins? Do you have some thoughts there?
We, of course, we're awash with press releases on the subject of CBDCs, but it looks today that due to sort of the level of technology and sort of the innovation that comes behind it, I think that for the foreseeable future, at least, it will be private entities who operate these markets because the incentives are in place. No stable coin, out of the two big ones, USDT and Circle's USDC, of course, as a holder of that token, you don't get paid yield, you don't get paid interest rate. And as a result, the interest or the incentive is already in place for the issuers to make money. As you guys are probably aware, Tether about 2 years ago made over 6 billion in EBITDA with a 70-person team. I wish that on all of us. But at the end, this is what it is. These incentives are in place for the issuers to actually collect the yield. And if the macro environment changes and interest rates go down, this could change in the future. But for now, it appears to be the case.
Okay, got it. Yeah, Bhaskar, now I actually want to move towards Bitcoin. So it was the first decentralized money solution, actually, right? Where people can freely transact and send something of value to each other through a decentralized network that is not controlled by a central counterparty, right? So it's an added value that is not controlled by a single point of failure, right? But today, I think many are reflecting, is Bitcoin the right medium, actually, right? For payments, right? For remittances. So what are your thoughts? Is there a place for Bitcoin in the space of payments? Or do you think that Bitcoin over time, especially today, but over time in the future, will be more of a collateral, reserve assets? A lot of central banks today are even looking at or exploring buying Bitcoin, or that this is actually an investment product. What are your thoughts?
You rightly pointed out, right? So Bitcoin today, as is a means to store value. And you cannot transmit value through Bitcoin, because when you start storing and when you actually move it, the value changes. Even a percentage point or a few bips of change cannot be taken by transmitting services. So for that reason, Bitcoin will never, in its current form, can never be a form of transmitting money from one to another. It has to be something of steady value, which is why it is called stable coin, right?
Yeah.
It is supposed to be stable of value. So when you send it, it should be, you should get almost same or similar value. So today, everyone, I think most of you, most of us, can buy Bitcoin as an asset and hope it will appreciate.
Yes.
It doesn't happen with stable coins though, right?
Yes.
I think that also with stable coins, I don't think it is also going to be used by common man until it reaches $1 trillion or $2 trillion of currency in circulation. Today, until that time, it's going to mostly move as settlement layers,
Okay.
as bulk transfers, as B2B transfers. For everybody to use, it's going to take at least a couple of years. Yeah.
Okay. And when you say that it's going to take a couple of years, you think that the gap is there on the technology side, on the adoption side, regulation? In a few words, like how do you see it? Yeah.
It is about acceptance, isn't it?
Yeah.
So, like I said, when you want money, you should be able to use it. Today, that
Yes.
liquidity is not there. I don't think people care about regulation. For me, as a business, I want things to be regulated so that it gives credibility for me as a company to provide the service to the customers.
Yeah.
But most of them, it's mostly on convenience. Think about Uber, right? When they started, they didn't have any regulatory framework, but everybody used it because it was convenient for them to use it. And later on, they got regulated.
Yeah.
So same way, for us, it is more of giving the convenience. Once they find it convenient to use, I think it'll be usable. Yeah.
Okay. Yeah. Andre, what are your thoughts as a payment processor from that angle? How do you see Bitcoin, or what do you see within the industry? How people are using cryptocurrencies for payments? Is this a myth, or is this a substantial amount of volume there? Or maybe some other cryptocurrencies?
I can give you specific numbers. We
Yes.
have hundreds of different brokers in iGaming and Forex, prop, e-commerce, marketing, you name it. We process on various industries. Bitcoin is a store of value. Basically, it's not meant for transactional. It was created, I have to give props from the beginning, it was created for that purpose. Compared to the banking, SWIFT and ACH, it was next level. But us people, we changed its purpose pretty much. And we evolved to the stable coins, basically. To the current day, 80% of the flow that we see is USDT TRC20.
Okay.
10% USDT TRC BEP20, because it's cheaper,
Yes.
faster. Then we have ERC20, 5% that's being used on the market. That's already 95% of the flow is USDT. Then we have USDC, 1.5% at best. Bitcoin then is 0.4, Ethereum 0.23. So we have use cases of it on Bitcoin, but it's minuscule compared to what's actually being used on the market. And the reason stablecoins are being used more than Bitcoin, first of all, it's the speed. Bitcoin takes hours.
Yeah.
Even though there are methods to make Bitcoin faster, there's Bitcoin Lite. You can even confirm Bitcoins with faster by not waiting for all the blockchain's confirmations, but for 1, 2, and you can make it within 2-3 minutes as well. But it's still not as fast as stablecoins. And you have the volatility on Bitcoin, which you don't have on stablecoins. And that's what's being used by the common man, let's say that. They want fast, they want stable. Same thing with the businesses. They want to be exposed. Most of the businesses come to us and they're like, are we going to be holding crypto? I'm like, no, everything's converted immediately, automatically, it's 1-to-1, etc. So that is the main use, will be in stablecoins, and we'll be adopting more and more as we grow. 5 years ago, there was about 60 million crypto users. Now there's about 600 million. By 2030, it should be around 1 billion prediction in terms of users, and mainly on stablecoins.
Okay, awesome. And maybe you can just add one sentence, because it was very interesting when you were explaining that the end users use different networks actually to transmit value. I think you said that the most popular is Tron, if I captured it from your. So can you tell us a little bit, maybe just to explain to the audience, how come it's Tron? How come it's Binance chain, right? So what's happening there for the audience?
Well,
is it speed, or is it just cheap?
Initially, TRX, I would say, was the cheapest back in the day, and was the fastest at the time. They came in at the right time, they got the right product, but as people started more using it, there was more demand for it, and naturally the gas fees, the cost for using it became more expensive. And they didn't, I mean, their network speed basically is not as fast, let's say, as other ones. There's new chains that are more and faster than that, but to the common man, it's still okay. One minute, it's more than enough for them. But it's still being used as number one because it was there from the beginning. Nice. The costs right now, it's if you look at the gas fee, it's like technically 3.5, something like that. It's ranging. Exchanges give it for 1.5 or 1, and so on. So it's not that expensive if you compare it to other costs. BEP20, it's being used more by merchants, actually, to send money, because they understand that to them, they're dealing with hundreds of millions. And every time they send out transactions, it costs them 2.5, 2.5, 2.5. So they opt out for BEP20, which costs them cents. It costs cents, and same speed. So they opt out to pay their clients still in USDT, but just on a different network in order to make it cheaper for themselves, basically. So that's why we see the use case in BEP20 increasing dramatically, especially in the last year, since Tron got more expensive.
Awesome. So this is amazing, because you also actually explained a clear use case, for instance, in particular for Binance chain, right? But I would also like to maybe ask the rest of the audience, so where do you see from your perspective the biggest use of stablecoins at the moment, but also look into the future, and where do you see the biggest growth going forward? Maybe Bhaskar, if you want to kick it off.
Today, as on date, the biggest use case is transmitting money in bulk, which is treasury flows. Moving large sums of money from one end to the other, like how everybody pointed out. When you are mixing currencies, it's so difficult to manage. Stablecoins and especially USDT, as Anton pointed out. USDT in Asia, USDT is the biggest volume, but in Europe, because of the MiCA regulations, USDC is getting pushed to be used. But otherwise, I think for the longest, for at least the near future, until the total usage increases, it will still be used for larger sum of movement of larger sums of money than for retail payments.
When do you see potentially retail payments coming, like the end user? Is this something in the near term, more 5 years out?
I would say 1 to 2 years, maybe. 2 years plus to less than 3. Yeah, should be.
Soon.
Yeah. I've seen in some airports, I've seen you can pay USDT for taxi.
Yeah.
Right? Not every place you see that, but you start to see that visibly in some places, but you don't see that in regular POS machines, right? When you see that in POS machines, that's when retail payments happen, right? Yeah.
Yeah, I think everything you said makes sense. I think what we're seeing in terms of volumes, it's settlements, it's that cross-border payment. Yeah. That's where it really makes sense. I do think consumer adoption is slower. I mean, for most of us, I'm lucky enough to live in the UK, the pound works, right? So no reason for businesses or consumers like myself to switch over to stablecoins. When you go into a country with a volatile currency, it starts making a whole lot of sense to move some of your dollars or your local currency into stablecoins. So I do think we will see more consumer adoption. I love the predictions, maybe we'll get there relatively quickly. And then we also have sort of the traditional players that are gravitating towards using stablecoins. So Visa and MasterCard both now have cards issued with stablecoin balances. So consumers are able to pay for goods and services at the till with a Visa credit card, and the conversion happens, in real time. So I do think as these systems kind of start working together in unison, we will see that friction decrease, and that will increase the adoption from the consumer side of things.
Yeah, Alex, what are your thoughts here?
So I think that on the side of stablecoins specifically, and focusing on sort of the contrast between fiat payments and the card schemes. Today, the stablecoin issuers are not in a major way subsidizing adoption. They're in fact all the revenue that they just take it and.
It's great you're here making money. So congrats.
I mean, sure, and so two arguments to
There's
this.
restrictions with that, right? So it's not, We'll find out with the clarity, I think.
Well, hopefully it introduces clarity, all pun intended. But I think that first and foremost, if we look at the chain debate, the debate on blockchains. So a blockchain is a business that effectively sells block space. And this is how the user at the end, or merchant, or any actually ecosystem participant, that's how they transfer value to the folks operating the chain. And so from that perspective, I think that whenever Tether and perhaps the Tron Foundation get together and start incentivizing adoption, this is where we'll end up with the POS terminal having a payment option that takes stablecoins.
I actually disagree that it's on Tether. It's actually on us as the processors and the gateway that need to make it easier for the merchants to make sure it's easier for the retail clients. And this is where we come in as a processor, as Match to Pay specifically. Why the adoption with consumers is so slow? Because it's not easy. It's not fast. You take out your phone, you pay for something, it's literally one click with your fingerprint, done. With an NFC, etc. Right now, to pay for something crypto, copy address, put it in network, put in an amount, double check. It takes minutes.
Yeah.
Not hours, but it takes minutes to go through the process. We're taking a step further and trying to close that gap by having direct integrations with exchanges, with wallets that the users use. You have a preferred wallet that you use, either Trust, Ledger, Meta, Phantom, right? You trust them, you use them all the time. And we basically facilitate that. We have direct integrations with them so that you connect that wallet to your preferred merchant where you're going to buy. Even if it's with a Forex broker or some e-commerce, you connect within seconds now instead of minutes, and you don't have to pre-fill anything. I mean, you don't have to fill it in. It pre-fills everything for you. The amount, the network, the coin, and the address as well. So that speeds up a lot, but it's still not at the stage of fingerprint POS system done in payments. That's why it's not being adopted, not used by consumers by mass. Once it comes to that section where my wallet NFC connect to the POS and it's paid, then it will be more. But that comes from us as the integrators of the processors, not from the issuers of the stablecoins.
Okay. And maybe for the last couple of minutes that we have, wanted to also touch the topic of regulation, right? I think we also, in our discussions, I think even a few of you said, well, it's perhaps one of the most challenging topics because stablecoins grew so much, right, without having a regulatory framework, right? So dollar stablecoins are the most dominant in the world. We have now US opening up, even the administration looking how to adopt dollar stablecoins, but other countries need to preserve their own fiat currencies. So I want to get your thoughts, actually, in the last couple of minutes that we have. How can local authorities, local regulators, central banks, what can they do when it comes to stablecoin regulation to adopt the global stablecoin movement, but also protect their own currency? Maybe you...
Yeah, I'll start. I think, so any country or company that is considering issuing a stablecoin, I think there's really three reasons why they should or should not do that. I think first is sort of defensive, the second is sort of offensive, and then the third is sort of infrastructure. So if we think about, let's start with a country, Turkey and Nigeria, I think highest adoption of stablecoins today. They're starting to compete with the central banks, right? So the central banks are in a predicament where they're losing control of interest rates and kind of controlling the funds of their own country. So in that sense, it's a defensive play for them to issue their own stablecoin-backed currency. The offensive play, is kind of the opposite. You're in Dubai, right? There is now a Dubai-backed stablecoin. It's sort of very proactive. You want your currency to be used internationally, so you're making it easier for that to happen. The same with Singapore. I think China is actually looking at this as well. So it's more of that offensive approach. Yeah. And then the third reason why would be infrastructure. So there are countries that exist today where there's still an unbanked, underbanked population. So how do you transition that population into using digital dollars? Well, it's a lot easier implementing a stablecoin infrastructure versus trying to build out banking from scratch. So I think those are really the true reasons why to approach stablecoins, in my opinion.
Maybe then also I want to ask you the same question, but I want to ask a bit with a twist. A big challenge in US in passing the stablecoin legislation was the yield on stablecoins.
Yeah.
How do you see that? Maybe we can pass the word to you. I want to give all of you to talk about the regulation, but maybe with you.
I mean, the U.S. has institutionalized lobbying, and so as a result of that, I believe that the current issuers will be able to continue their regulatory pressure on keeping the revenue stream, at least for the foreseeable future. So I actually want to double click on this concept of offensive play. And I think even a more offensive way to do this is for countries and their central banks to actually start providing liquidity with their local coins abroad, similar to how central banks maintain reserves. It will be basically the equivalent of maintaining a pool on hyperliquid with their own stable pairs for dollar-denominated or other currencies. And this actually puts them in a place where it's much higher velocity, they have much better visibility. Because you gave the example of Nigeria, and I love that example. The central banks have no visibility into these flows. They just have no idea about seasonalities, they have no idea how to hedge exposure. So to them, they're basically flying blind. And that's not a good place to be when you have a country scale economy to manage.
And maybe for you, actually, a question then, how do you then deal with, on the regulatory front, when in many of these jurisdictions, actually, you're offering dollar stablecoin services? Do other regulators understand that? Do they have preference? How does the dynamic look like? And then,
Can you specify a bit more?
Yeah, so for instance, I'd like to give an example in Europe, there's a growing understanding, actually, that through dollar stablecoins, dollarization can impact even further Europe, right? So even though the stablecoin legislation now enables USDC and to be listed on all of these exchanges, but the preference, or at least the public communication, is that actually this increases further dollarization, right? And this is actually for Europe. But there are many other jurisdictions as well, actually. So how do they then see, when they think about their stablecoin legislation, how do they actually then wrestling with the fact that dollar is the dominant stablecoins? Do they want to block it?
I think the fact, regulatory-wise, other countries adopting stablecoins, there's USD in general is a dominant currency worldwide. If that doesn't change in fiat scenario, it's not going to change in a stablecoin scenario. You do have to have your own stablecoin to keep up with other countries, with other jurisdictions, to have it within your own country, so you can, so your institutional level, government level, everything is moving faster on your own infrastructure, on your own stablecoin to your currency. But there is no competing with a major currency like USD. You will have to use it. You will have to use it in your country. If you don't, There is no option, let's just say that.
At the moment.
There is no option.
Okay. Oscar, maybe also for you the same question, but I want to put it from an angle of some of the biggest countries in the world today that they have actually opportunity with stablecoins. So for instance, China, one of the biggest exporters in the world, they're looking at their own stablecoin frameworks. India, for instance, as well, one of the biggest exporters, producers in the world, has an opportunity as well with stablecoins, right? So how do you see then the dynamic regulation, dollar stablecoins, and also these new emerging big countries, what they can do with the stablecoins?
One of the most important things that most countries and regulators have to understand and agree is the dollar is the most popular currency, and it's not going to change for the near future. So they have, even though they can produce their own stable coins, there should be interoperability back and forth.
Yes.
And that is the only way they can be better off. The whole reason, even India or China, they're so protective and not letting people use stable coins is because they're so worried about money leaving the country. So if they are proactive and get their own stable coins sorted out and make sure the interoperability between an INR stablecoin or CNY stablecoin to USD stablecoins, just like how in the fiat world it works, I think it will work the best for everybody. The problem is regulators are always slow for various reasons. They want to be sure before they do something, but that's the hinging point, and technology is always fast. So they're trying to do catch up. Yeah. So, but personally, I would like to be regulated.
Okay.
Yes. Because then you give credibility to the customer. Yeah.
Awesome. Yeah. So thank you, everyone. I hope you enjoyed this session on stablecoins. I thought it was really awesome, really insightful. So thanks for our esteemed guests for joining us. And if you have a question, please, after the panel, just reach out and talk to our guests. Yeah. Thank you. Thanks a lot.